Ladies and gentlemen, welcome to the study. Going to be talking about China stocks and Alibaba today. Before we proceed any further, I would like to state that the information in this video is not a recommendation to buy or sell any securities and is for educational purposes only. So if you have been following the stock market the last couple months, you may have noticed several escalations from China. China has been conducting crackdowns, regulation changes on many different sectors, from cryptocurrency mining to cracking down on private tutoring in the education sector, where we saw billions get wiped out. So you can see here I have that article pulled out. The Chinese state media is even claiming that video games are spiritual opium, which harmed the likes of Tencent and others involved in that space. You can see more about this article. Look that up. And then here we are now to big tech, and you can see even Markets Insider here references that shorting Chinese stocks is the third most crowded trade in the wake of Beijing's crackdown, fund managers tell B of A. It's very interesting how big tech has kind of now been the focus. We've seen it with DD IPO, if you guys have been following me. I've been all over this one, and it's just been such a crazy ride for investors, especially at the IPO, especially people that were pretty much listening to CNBC and, that retail trader listening to Kramer rave on about buy more DD, and it just ended up being a big flop. And it's just been very devastating with the timing of all these regulations and such. So tech has been a continuing developing story over the months, where you see now this trading strategy developed with shorting and continuing to short the China stocks. And there's a lot of risk to these China stocks as China's policy is now undergoing changes. And the president stated that the country is trying to achieve something called a common prosperity. It's their effort to rebalance their economy and distribute wealth. So a little bit more on that. They have some pieces here from Bloomberg, and specifically Alibaba taking a huge dive that I'm gonna talk about specifically why this is so important for me to actually make a YouTube video on this and focusing on Alibaba, because I'm seeing a lot of followers on Instagram. I'm seeing people who follow the stock market bring it up. Hey, I want to get into Alibaba now, and it looks like it is a good time to get in. And what is very interesting is that many investors argue that China stocks are uninvestable right now. And although that is a bit extreme in my opinion, I do believe that there will be opportunity, but you have to ask yourself this question. At the end of the day, is it for you? And maybe I can help with that decision and share my opinion on this subject. So, one is the amount of risk involved is going to be more than average. Why more than average, you may ask? Because there is something called political risk. Political risk is going to be something that comes into play where the subject of whether it's policy through the country or a trade deal, partnership, any political influence that can influence the market directly. So with a China state media calling the shots here, it can directly impact companies like we just saw with that article with the education companies, like we saw with Tencent taking a hit, and now like you're seeing with Didi and other big tech names like Alibaba. Other types of risks in the market, inflation risk, definitely that's on the table as well, as we're seeing inflation and month-over-month prices going up for goods and services. You are also going to have, of course, market systematic risk, which is always going to be there in place. So you really have to think about measuring all of this risk together with the political risk on top, because you're going to see that political risk be very troubling when there's a rapid change in policies. The president could make a change at any moment, which we saw with the sudden disappearance of Alibaba's Jack Ma back in November 2020. And I personally don't feel comfortable picking up extra risks on the table outside of my control. That is the key for me. When I feel like it's just out of my control, I don't like that idea. I don't feel comfortable. I can't sleep at night. Some investors can sleep at night, and they like to have that extra risk and exposure to markets outside of the US. But for me, and maybe you may share the same view, is that I like to know that I can control my investments in other stocks and big companies, for example, within the US, the New York Stock Exchange, or the NASDAQ, for example. So for now, during this time, I'm going to continue to invest in these markets, which these US markets that have proven to be historically resilient and continue to trend up. Now, a common argument for the other side of buying or being long bullish for Baba is that when you're looking at the value of the stock, I get it. This is very attractive when we see a big tech stock that was trading at a high of about $319, right? And now trading in the 160s range. Let me see if I can pull up that chart. Yeah, look at this. This is a yearly chart. You can see that the stock has significantly dropped. You can see that from July 19 to August 16, almost a month later, look at that. In 1 month, from about 215, the stock price, to 160, that is quite a significant drop. When we look at popular valuation metrics used for, such as price to earnings ratio, this company's trading at about 23.98. And when compared to other tech giants such as Amazon at $58.25, Microsoft at $36.68, Shopify over 300. What exactly is the price to earnings ratio, you may ask, right? So you may be familiar with those numbers and those terms. And pretty cool, on the Thinkorswim platform, you can go over here, analyze, you type in the stock, you got Baba right here, and you can pull up a lot of information here. But if you scroll all the way, let's see here, valuation, you get your price to earnings ratio, 23.98. And so what exactly does that mean? That is when you take the share price divided by the earnings per share, which will yield you that PE ratio. And essentially what this means is that this is the price you must pay per unit of current earnings or future earnings. If you're still not getting what I'm saying, an even easier way to understand this concept is that your cost as an investor to buy at least $1 of profit is inside that PE ratio. So in other words, you purchase a share of Baba at 160, for example, right? It's at 160.55. So at $160.55, this will cost you about $23.98 to buy you $1 of profit. That's what I mean by seeing it in an easier way to understand the concept, is that as an investor, you are that cost is going to be $23.98, which is a great way to visualize your $1 of profit of that money working for you. And it's a great way to see it over the grand scope of all your investments, to make sure that, hey, this is good value that I'm getting out of my money parked here in this investment company, and gaining those returns and compounding it over time. Especially when you compare it to competitors like Amazon. If you type in Amazon here, you are going to get that price earnings ratio, which is 58.25 right here. So it's about a 58 to 25, 23.98. Pretty significant difference there if you are value investing. And that's why you've seen some of the OG guys, Buffett and Munger, talk about Alibaba because they look at metrics like this and say, hey, this is a great investing opportunity. So that is the bullish or the long thesis going on here in this picture. Now, as for me, I won't be shorting Alibaba or the China stocks. I feel that there's already so much damage done here, as you can see on the chart. I do think I'm a little late to the trade. If you've been trading this thing, you have made a killing off to the puts and downside. I do think that there's more room to the downside, but it's going to be very tough with so many events taking place, news in the market. You have the Fed playing a role. You have the events happening in Afghanistan. You have the China escalations that just seem to be continuously something new every week in play. You also have the situation developing in Cuba as well, where I believe that can also make an economic impact as well on trade. So I don't plan on purchasing any stock in Alibaba or China stocks like Baidu, Tencent. I'm going to be using this opportunity to see how the overall market reacts to this event and the news, to see if it creates buying opportunities in other company names. And again, that political risk in combination with the global inflation risk at play and the systematic risks on top of that, it just does not fit my taste or my preference of having that much risk on the table. So guys, I hope this video cleared up any confusion, and I hope you enjoyed this video. If you guys did, hey, leave a like and subscribe for more. You can visit me at thetradestudy.com, ask me any questions you may have, and I will see you in the next one.